where are the markers for investors to actually know when this market's going to go? Because like I said right at the beginning, it feels like not too many people know what's going on.
You only need a sentiment switch for this market to tighten. For generalists to get involved in the commodity, we're going to need a movement in price. I don't think that we're going to see a change in investor sentiment until we see price change. There's not enough potentiality visible to the market.
Hello and welcome to Crux Investor. We're here today with Munro. He's the CEO of Bannerman Resources, a uranium player with assets in Australia. How are you?
Great, how are you?
It's been a while.
Yeah, it has been actually.
Yeah. So obviously I think the last sort of major event here in London was the WNA, the World Nuclear Association event, of which you sit on a couple of committees, I think.
Yeah, that's right. So I sit on, there's a working group that's producing the next nuclear fuel report. The last time we got together, we talked about that when it was released in September 2019. So now we've started kicking off for the 2021 report.
Right.
So I am involved in 3 of the working groups, and I chair the working group that determines the demand projections for nuclear fuel out to 2030.
Fantastic. Now, you've had a few meetings in London this week, a few working group sessions this week. You've kindly agreed to come and tell us a little bit about what you're discovering. So last year, difficult year, another difficult year for uranium. It didn't move the way people had hoped. There was no price discovery. Equities haven't moved much. I think if anything, mostly gone down, some a lot more than others. And there are a few sort of major catalyst moments which didn't really do anything. Okay, not least of all the Section 232, and even the conference in London in September didn't really have much of an effect. I'm not quite sure anyone knows what's going on. Do you?
I can hopefully share a couple of insights with you. What we've got, I think, is an extraordinary situation where the visual part of the market, which of course is the spot price and the non-existence of any real term volume. As you say, there's no real price discovery, but to the extent it exists in the spot market, we've got something that just looks dull, boring, disappointing. And that's had a corresponding effect on most equities. As you say, it's been carnage out there for the last year for many, many companies. But what we can see taking place under that visual surface veneer, I think is very positive for the sector.
Right. Well, let's look at a few of those moving parts behind the curtain, as it were, because they, people talk about the macro story, and there's billions and billions of dollars of nuclear reactor infrastructure being built across the world in multiple jurisdictions and countries, and people focus on Germany reining things back. French did, now they're not, but there's more to it than that in terms of that infrastructure build out. But I don't want to talk about that because I think that's well covered. Can we talk about some of the inventory side of things? Because I think you kind of talked in the past about different piles of U308 and U6 and the EUP. I mean, what's happening there?
So what we're seeing is inventory tightening.
Right. Meaning what was tightening mean?
The sector always exists with a lot of inventory.
Right.
That's been the case for the last 30 years. So it's not helpful to look at the absolute total amount of inventory that's calculated throughout the sector. You need to understand where that inventory is held. Right. So inventory that's held by the Russian government or the US government or Chinese stockpiles, that's kind of interesting, but it doesn't dictate anything in the market because that material is just locked up for strategic purposes. The relevant part for investors and the price is mobile inventory. What inventory is available to either suppress demand or be sold into the bid when price goes up?
Right. Okay.
Because that's what's interesting to an investor. Is it going to suppress a price rise?
Absolutely.
And what we've seen there is a tightening. In U308, we've seen tightening largely because of the deficit that we've got at the moment. So even after allowing for secondary supplies, we've run a £20 million deficit for the last couple of years. So that is being drawn down predominantly by utilities underbuying. But what I find fascinating is, as you mentioned, you've got 3 forms of uranium in the nuclear fuel cycle. And, for the listeners, you've got U3O8, which is the mined concentrate. That's then subjected to conversion. And conversion is a service that is applied to the U3O8 that the utility pays for, and that turns U3O8 from a powder or yellow cake into a gas, uranium hexafluoride. And that's still a homogeneous commodity because it's just UF6. From there, you get enrichment, again, typically a service paid for by the utility where the uranium that they've bought off a mine then goes through enrichment to the specifications required for their particular type of reactor technology. In the old days, that's how it worked. The utilities would buy the uranium, they'd pay for the conversion service, they'd pay for the enrichment service. But what's happened since Fukushima, when we had reactors come down, particularly in Germany and in Japan, is inventory started to build up, not only in U3O8, but also in UF6 and in EUP, the enriched uranium product. And that's been a problem for our market because you've got a substitutability between those 3 forms of nuclear power. And not only can the utilities arbitrage between those 3 forms, if they don't like the price that they're getting in U3O8, then they can go to UF6 or EUP, but they can also ignore the time criticality of planning, because in the old days they would have to have bought their U3O8 2 years before they needed it, because it takes a lot of time to transport and move through that cycle. Now, if they sort of mess up on the planning, well, that's okay because there was UF6 available that they could buy 1 year out from when they needed it, or EUP that they could buy 6 months out from when they needed it. And that has contributed to the utilities being able to hold off on restarting the contracting cycle.
Right. Interesting.
Now, back to what's relevant today and why I say that the sector and the market is tightening in a very favourable way.
Okay.
First of all, UF6 has tightened almost entirely. So I've just spent a room with the people who play in this sector. And what happened, as you know, is a couple of years ago, Convidine put the Metropolis conversion facility into care and maintenance. And cleverly, they bought all of the UF6 that they could find, all of the mobile inventory in the form of UF6, they bought up. And they did that because they had conversion contracts. And when they closed the doors on Metropolis, they would have to continue delivering into those.
Interesting. Okay.
So UF6 is very tight, even so much so that we saw a few months ago Uranium Participation Corp swap out their UF6 for U3O8 and take advantage of that arbitrage. We've also seen a tightening in enrichment, and that has been exacerbated by geopolitical concerns around Iran's sanction waivers, and maybe we can come back to that. So we're seeing EUP tightening. U3O8, we are also seeing tightening, but not to the same extent, hence why we've got $25 uranium or $24.50 uranium. But if you look at what happens when those markets tighten, UF6 in the time frame that I've described, that's gone up 400%. Spot UF6, spot conversion. So conversion is the price of the service. So the difference between what you pay for UF6 and what you pay for U3O8. 400%. And that's been a wake up for the utilities because many of them forgot that those sort of increases are possible.
So that tells us something.
Yep.
What about the enrichment component? Has that gone up?
Also, not to the same extent.
Right.
But it's gone up from mid-30s. So it's measured as US dollars per the SWU price, the separative work unit, gone up from mid-30s to about 50. So that's also a healthy increase.
Okay, so this is what you mean by sort of, behind the curtains, there are things going on which are indicative of a movement or the need for a movement relatively soon. So why weren't these conversations happening in the beginning of 2019? I mean, because the numbers were starting to move in 2019, but they haven't had an effect on spot, obviously. There aren't that many contracts being written, as we know. So how do you work out where the threshold is? Where's that critical threshold that these numbers, does it need to get to 600% on the conversion? Does it need to get to $70 on the enrichment? Where are the markers for investors to actually know when this market's going to go? Because like I said right at the beginning, it feels like not too many people know what's going on in the uranium space at the moment.
So I tell you all that it needs, because I've been, as you know, been in meetings in London for the last couple of weeks, and I get the same question: what's the catalyst?
Good.
You only need a sentiment switch for this market to tighten. And that sentiment switch can come from anything. So if we use the examples now of UF6 and enrichment, in UF6, when sentiment was low, Convidine were able to buy all of the UF6 that they needed to buy. And they did that. The moment the price started to go up, the mobile inventory disappeared. And that is a fact in this market. There's an inverse relationship between the mobility of inventory and the price. As the price goes up, inventory disappears. And we even saw that, talking to some of the traders as I have in the last couple of weeks, we even saw that in October, November, when we started to see a bit of an increase in the uranium price. It went up about 8% in a couple of weeks. Yeah. And the inventory, the availability of U3O8 vanished. It only started to come back when the price softened again. And the various parties who had it to sell figured that there was no time value in money at that point.
We talk about sentiment, okay, and I agree with that. That's market-wide, not just mining, across multiple public companies, sectors. Where are the drivers within in that description? So sentiment of utility buyers.
Correct.
That right there. Nothing to do with retail. Nothing to do with institutional buying. So that's what you're talking about. Okay.
Let me put some numbers on that.
But sentiment's a very soft thing. Okay. Utility buyers are actuaries, right? They're reading the market. They're going to do what's the right thing economically for them. That's not sentiment to me. That's just smart about their buying. They're going to buy cheap for as long as they possibly can. They understand what is out there, and they understand when they need to start buying. They and no one else understands that, so they are very much in control. But that seems a very cold, calculated thing rather than sentiment. So, what do you mean?
So let me try and explain that a bit further and put some numbers on it. Okay. So maybe sentiment's a little bit wishy-washy, but really what we're talking about is their view of the medium-term price and what effect that is going to have on their immediate actions. Okay, so some numbers. We're running a £20 million deficit in the U3O8 sector at the moment, after taking into account secondary supplies.
Okay.
So to put some numbers on that, 2016, the sector was knocking out about 160 million pounds of U3O8 production, mined production. That's now come down 25 million pounds because of care and maintenance in MacArthur River, the Kazakhs reducing, and various other supply destruction that's taken place in the sector. Secondary supplies, all of the various forms, running at about 25 million pounds against a reactor burn up of 180 million pounds.
Okay.
Rough numbers.
Yeah.
So far, there isn't enough demand at the U3O8 level to put pressure on the price. So what we know is that there's about, instead of 180 million pounds of demand, because that's the amount that's being burnt up each year, it's about 160 million pounds of demand. Okay. Caused by two things: preferential buying of UF6 and EUP over U3O8, and utilities wearing down their inventories. So 20 million pounds, if I then translate that into numbers in the US, for example, in rough terms, the US nuclear fleet consumes about 50 million pounds of uranium, and they've been underbuying the last few years by about 20%. So 10 million pounds per annum. All they need to do is make a decision that they're going to change their policy from underbuying to full coverage, and that's 10 million pounds. That's a dramatic effect on that 20 million pound deficit. Or we could see financial players enter the market again. So in 2018, about £10 million was taken out of the market by Yellowcake and UPC topping up.
Right.
Again, that's a £10 million swing. So a swing like that, particularly if it goes up to 180 and starts to really expose that supply-demand deficit in U308, that's enough to generate a very sharp price response, which will then have secondary effects in terms of secondary buying.
It's interesting. I mean, do you think there will be financial impact from, well, not necessarily Yellowcake, but players like Yellowcake in the market going forward? Because, again, they don't seem to be able to raise the capital cheaply. Yellowcake have got their own issues at the moment. And I don't see any generalist funds wanting to back another team buying up uranium at the moment. I mean, are you aware of any?
Yes.
Okay.
But it's private. So
Right.
we're aware of family offices clubbing together.
Okay.
We're aware of banks and hedge funds, but it's not the same model as a Yellowcake. A Yellowcake is a buy, create a market instrument with liquidity and hold into the long term.
Yeah.
So the other buying in the financial market that we're starting to see is not a sequestration
Right.
of that uranium
Okay.
in the way that UPC and Yellowcake.
I mean, it's such a small market. I mean, it's a
Yeah.
$10 billion market.
Yeah.
It's nothing. So, big institutions, it would surprise me if they create teams to take advantage of the
Correct.
uranium space.
Yep.
So,
And look, let's face it, investor sentiment is desolate at the moment in uranium. So for generalists to get involved in the commodity, we're going to need a movement in price. I don't think that we're going to see a change in investor sentiment until we see price change. There's not enough potentiality visible to the market for investor sentiment to change until price does.
So let's move on to other things I want to talk. There's so much to talk about. There's other things I want to talk about because obviously in conversion and enrichment prices going up. I think that's a big clue. However, trying to understand what the timing of that is more complicated. So, and I'm going to try and get some sort of forecast from you at the end of this conversation. But talk to me about the JCPOA, please.
Okay, so Joint Cooperative Plan of Action.
Right.
Put in place.
Who are all the parties involved in that?
So it's Iran on the one hand.
Yep.
And then you've got the UK, France, Russia, China, and the US.
Yep.
So they are the cooperative parties.
Yep.
Put in place in 2015 because, as you know, Iran was showing signs of building a military nuclear program. And the plan was designed to hold off sanctions on Iran in return for Iran complying with certain obligations. Right. Predominantly, they were obligations of maintenance and monitoring, unfettered monitoring of their facilities, and obligations designed to go further than existing non-proliferation obligations that are imposed on everyone else, to put a big spacer between Iran defaulting on its obligations and having the capacity to produce military-grade uranium.
Right. So before Christmas, November time or so, that started getting a little bit more complicated. The US pulled out, plus the actions of a couple of weeks ago, again by the US, further complicated relationships with Iran. So can you talk to us about your view on the US and the European, well, generally European alliance with Russia as well, and how you see that going forward, because things just got very complicated.
Okay, so it's good to step back a little bit to try and work your way through the detail and the complication here. So the JCPOA was set up. One of the first things that the Trump administration did was to withdraw. And they did it in a way where they withdrew unilaterally. There was a diplomatic scramble by the other cooperative parties to try and keep the agreement on foot. And what that enabled the Trump administration to do was to re-establish a whole range of sanctions on Iran, but that were being held off because of their commitment to the JCPOA. Oil sales, access to the US financial markets, etc., etc. But what they didn't do is they didn't allow those sanctions to extend to the provision of services and fuel to the US nuclear industry. And there was this thing created called the sanctions waiver.
Right.
And the sanctions waiver needs to be reevaluated every 90 days. So every 90 days, the Trump administration sits down and says, are we going to give another 90-day waiver or are we going to withdraw the sanctions waiver? And importantly for the sector and for the utilities and for the listeners, the next sanctions waiver consideration date is 31st of January.
Yep.
Now, what happened is November the 19th, Mike Pompeo announces that the Trump administration is withdrawing the waivers in respect of the Fordale enrichment facility that was being used initially under the JCPOA to produce medical isotopes. But one of the progressive breaches of the agreement, the JCPOA that Iran announced, was enrichment of civilian-grade uranium rather than just for medical isotopes. Now, Fordale's a tailor-made facility for the electorate in the US, built into a mountain. It's real James Bond stuff. Clearly, it was set up to produce military-grade enrichment when you look at the configuration of the cascades and that sort of thing. So it's an ideal target for the Trump administration to show that they're really serious about this. December 15 coming up, the utilities become very concerned because no one was particularly clear who was involved in the Fordale facility. And when the waiver gets lifted on December 15, it could have been mayhem.
Right.
Now, to understand why the utilities are concerned, half of the enrichment services provided to US utilities comes from Russia. Some of it directly from TVEL and 10X, and some of it is effectively resold by other enrichment providers. And the excess capacity in the Western world enrichment isn't enough to fill that gap. Not only that, but Rosatom as the Russian nuclear giant, it's involved in absolutely every aspect of the civilian nuclear power cycle. As it turned out, TVEL withdrew from its involvement in the Fordale plant because it was providing assistance with their medical isotopes, and according to them, any civilian enrichment creates contamination that makes that program impossible. So that one sort of washed over. December 15 came and went, and all was okay. So now we fast forward to what you're talking about with a huge escalation of tensions in Iran a month before the next sanctions waiver. So there's a lot of concern from US utilities, but also European utilities, that if that sanctions waiver or the entire deal falls over, the Russian nuclear providers are going to have to make a decision. Do they back Iran and continue to support Iran and be restricted from providing a whole range of different services and products?
It's not just the Russians here. Let's you've got the Brits, the French, the Germans. There's a lot of superpowers, part of the G7, who are involved with this, G7 plus Russia.
Yeah.
They don't agree with the American stance and position. Certainly not what happened 2 weeks ago. And I think there's been a lot of posturing going on. And I don't want to get this into a political conversation. I want it to be about uranium. But the reason why Europe hasn't followed the US is because they think that the Iran deal is a good deal.
Correct.
It's working, and I think a lot of people in the US think it's working. But it's rather unfortunate timing because, again, the perception, I don't want to get into the politics of it, but perception is in an election year, going to war has traditionally been quite a good vote winner. So, it's that whole mess has been sort of slightly discredited with the timing. But what impact is it going to have, if any, on the... I'm going to bring it back to investment. Okay, so is what's going on in Iran going to have an impact on the ability for equities, uranium equities, to move forward, or is this going to actually be another negative impact, another negative event in the world of uranium equities?
Okay, so let me just clarify one thing before I answer that question. Yesterday, so until very recently, all of the other parties, ex-US, were declaring their support for the deal and doing their utmost to keep the deal on.
Give me an update. Good.
Just yesterday, they invoked the dispute clause under the JCPOA.
Interesting. Okay.
Article 36. And
what does that mean?
It basically means that there's a 14-day dispute resolution, and what Boris Johnson has said is that he would like to see a new deal, which he aptly named the Trump deal. So I think what they've realised is that they need to try and get Iran to come back to the negotiating table and renegotiate the whole JCPOA.
Okay, right. Okay, that's hot off the press. Right,
hot off the press, which helps to contain or eliminate the sanctions exposure of the other countries.
Right.
Now, how that unfolds, we've got absolutely no idea. And what effect that has on the sanctions waiver that's considered on the 31st, if such a thing still exists, we also have no idea. So that's created a new layer of uncertainty. Now, to go back to your question, it's a difficult outcome to pick because it depends. Let's just ignore the dispute that's being called for the moment. It depends on Russia's reaction. I think that they are so dominant in the nuclear sector and it's such a profitable, effective business for them that they would throw Iran under the bus. But you can't put a significant probability on that because it's so wrapped up in Russian foreign policy, which has been extremely successful in the Middle East for them.
It has. I guess people don't understand.
So that would then, if they were sanctioned, if Rosatom as a whole was sanctioned, that would lead to a period of chaos in the nuclear supply chain because they're so pervasive in everything, particularly what the traders are doing. You know, much of the supply of U3O8 these days is coming from carry trades and so forth that the traders are involved in. But they often have so many chains of custody with those supply chains that most of the time you've got Uranium one in there somewhere, or you've got one of the other Rosatom subsidiaries in there somewhere. And there's a chance that it could invalidate all of those, as well as the effect on enrichment.
Why is the US taking a risk on this? It's a no-size industry. It's negligible compared to oil. You know, I think that obviously Iran's sitting on a lot of oil. I guess there's some kind of, again, this conversation for another day. 50 million barrels discovered last year.
Yep.
New barrels discovered last year. This sector geopolitically is the messiest thing I've ever seen in any investment class, because it's a very emotive topic. Why are people so wound up about it? Investors get wound up about it. Countries get wound up about it.
Gets you and me pretty excited.
I'm excited because I think there's some great opportunities. I think there's some great companies sitting in here just waiting for people to just get back to doing business and stop fighting, for sure. But, again, maybe we should talk about that as another big topic, the geopolitical component, which I know we did talk about way back.
So you asked me what effect it's going to have for equities. So there is a period of, if it unfolds that way, there's a period of confusion and chaos and hard to know what equities would do. Into the medium term, though, it's going to be beneficial for U3O8 and beneficial for equities. Number one, it's an important reminder to the buyers in this sector, the utilities, that geopolitics does matter and geopolitical risk does play a role. So they can't just hoover up all of the material from Kazakhstan that they want at whatever price they want. They must have a diversity of supply, which leads to a stacking in the price that they pay for uranium.
Because the supply chain may break further down the line. They need to get certainty. Okay, interesting. One.
Number two, if we see a break in the chain of custody amongst all of these trades, then it's going to push the utilities back to dealing directly with producers.
Okay.
Which in the medium term is a good thing for transparency in the U3O8 price, and it's also going to lead to more price discovery. And whilst the traders argue that they play a very important role in ensuring the efficient operation of the market and so on, where we are at the moment is that they're playing a role in suppressing price discovery through the various instruments that they've got.
Okay.
So positive in the medium term, unknown in the short term. But with any unknown, we could see a very sharp price reaction in U308, which would be extremely positive in the short term.
I think people would have argued that at the beginning of 2019 too, wouldn't they? So what lends you to feel that it's more the case today than it was a year ago?
Because we're talking about the scenario where we have sanctions waivers lifted and chaos in the sector.
Okay. Well, let's wait and see what happens then. I do want to get on to the next topic. Okay. But thanks for that. Okay. We get a lot of commentary from retail investors, family offices, fund managers, CEOs of uranium juniors, and they're talking about the returns to the peaks of $130, $140 uranium, sitting at 25 today. I'd love your view on that one, but the other thing they talk about is the speed at which that returns, the speed at which share price turns, and it's a hockey stick, of course. So those are great stories. I don't believe them, but they're great stories. What's your position? Do you think we're going to see a repeat of the last cycle? Honestly.
I don't think it's realistic to expect a repeat of that degree of volatility.
Why?
Well, when you look back at that volatility, and I was in the sector at the time, but I was working as an M&A lawyer. So we're on the M&A side, takeover defences and so forth. And I can remember there was a lot of commentary about uranium going to $200. And it was a great unknown. The extent of reactor builds was an unknown, and obviously an upside unknown. There was a nuclear renaissance. There was a huge amount going on. It was a demand story in those days. And when there's enough people saying that uranium could go to $200, as it sails through $100, it still feels like a viable buy to keep buying it up. And we had some other dynamics in terms of the Chinese being very early in their procurement cycle. They had big plans, which are now back on track, but back then they were significant. And those dynamics don't exist at the moment. Instead of being a demand story, what we've got today is a supply story, a lack of supply story, and a lack of incentivization.
Right.
I do believe there'll be volatility, and I think the opportunity for this market to slowly balance out at the right price, I think that opportunity has been slowly dissipating over the last 12 to 24 months.
Okay.
We would need price signals today and really over the last 12 months to incentivize enough new production to create a balanced market. So an overshoot is certainly likely, but I don't see it being likely that we're going to see an overshoot of $120, $130, $136 like we saw last time. It shouldn't be part of an investor's plans.
Okay, because you've got lots of companies talking about the need for $50, $55 spot just to be able to get, break even.
Yep.
Fine. And then you've got to be incentivized to actually make some money, because that's the name of the game.
Yep.
Whatever that number is, $65, $70, which would be great, but that's a long way away. It feels like today a long way away.
It feels like it, but
it may go quick. So you're saying it could go very quickly up to those sorts of numbers, but then the controls in place or moderation in the market or a little bit more savvy investment strategy now compared to then will temper the growth after that point? Or are you saying that's a slow, steady growth there? Because again, we've seen some numbers from various analysts which suggest this may hit $40 by the end of next year, which obviously doesn't do anything for anyone. So what's your thoughts?
Yeah, that's right. $40 doesn't do anything for the sector. It doesn't...
May as well be 25.
Correct. But that's exactly the point. In terms of fixing the supply disruption that we've got today, but coming down the barrel, particularly when Kazakh production starts to taper off, it could be 25, it could be 15, it could be 40. It doesn't incentivize anybody.
The Kazakhs just announced that they overproduced by 4%.
The deputy minister, you're referring to that announcement?
Yeah. So when it tapers off, is it a moot point at the moment because they don't seem to be following their own guidelines, are they?
I don't know.
Okay.
There's a number of statements. I did ask Kazatomprom that question over the last couple of days, and they didn't know either. So
okay, right.
So
okay, where does that leave the rest of us? Right.
Yeah.
Okay.
What we've got this situation where we need a significant escalation in the uranium price to even start to put new projects into the game.
Mm-hmm.
And as you say, is it going to be enough for them to get financed and constructed and built?
Mm.
So the range that you're talking about, I've got no problem with uranium prices getting there and staying there. And I think there is capacity for an overshoot.
Mm-hmm.
I just don't see $136.
What do you see?
I can see an overshoot to 90.
Okay. Sustained?
By definition, it's an overshoot, so not sustained.
Okay. Because again, at the beginning of this conversation, you talked about some of the controls in place and some of the people who can, control the market to a degree. And I've asked this question continually over time, and people say it's impossible for any big players to actually control the market, and that may not be the case. I personally think it's in the interest of people like Kazatomprom, like Cameco, not to let the market go too crazy, because no one wants 500 entrants in the marketplace like last time round.
Mm-hmm, mm-hmm.
But at the same time, we've had conversations with CEOs talking about roll-ups and consolidations and so forth. And I listened to Rick Rowley saying there's perhaps 6 to 10 players who will run in the market, 50 today. So obviously, people are expecting a lot of change in the structure of uranium producers. What's your take on what the horizon looks like? Obviously, we'll talk about Bannerman at the end, and we will speak to you. You've promised to speak to us the next couple of weeks about Bannerman. I know you've got a lot going on there, but how do you see the junior mining space playing out? Because there's like 5 biggish boys, and then there's a bunch of others.
Well, if we talk about capacity of the market, volatility, and capacity to overshoot, I think for an investor, they have to be saying, is there investment in the category of producible pounds for the next cycle? Or is it something that could come on in the cycle afterwards?
Okay.
Because if we do see an overshoot, it's only the companies that are in a position to benefit from that overshoot that are going to produce a superior result. Sure, there might be a little bit of bubble amongst all uranium companies with an equities response, but at the end of the day, particularly for institutions and investors who need liquidity, if it's not producible pounds, then in a sense, whatever the price is doing in the next cycle is irrelevant.
Yeah.
Perhaps it'll help their cost of capital, which might mean that they're diluted a little bit less, but you've got to be able to produce pounds into the next cycle. And as you know well, there's very few companies in that small universe of uranium investments that can actually do that.
Yeah, no, exactly. To me, there's some, again, big red flags across the market. People need to understand. They need to understand what good looks like and what not so good looks like. And for me, we talked previously about teams who have produced and sold into market, because we think that's really, really important, because it's a little bit more complicated than other sectors, right? We've talked about the need for certain the asset to be of a scale. Scale is really, really important here to be able to mine economically, because again, the basic rules of mining still apply. So companies with a sense of what the economics look like, that give you some clues as to whether you invest in them or not. But you guys, for instance, what's your team structure? Have you got people on board who've been there and done it before in a cycle?
Yeah, absolutely.
You have, okay.
So
right,
and for us that's been extremely important. So if you look at who we've got in the team,
right.
So in Namibia, our chairman is Mike Leach. He was the managing director of the Rossing uranium mine at a time when it was the largest uranium mine in the world. But before that, he was CFO for 15 years. So he was involved in all of the marketing and the contracting and everything about that to do with Rossing, which was a dominant player.
So let's take that. So when you go and have conversations, and sorry to swing it back into Bannerman, so I'm putting you on the spot a bit here, but I want people to understand the mindset of the junior miner board. Okay, so you've got an experienced team. When you're talking to, whether it be funds or, I know you have a lot of talks with people in China, because the scale of your project would suggest that that's probably where you're leaning, but I'm sure you can tell us another time. What are they looking for? Is that an important factor to them? I say it is, but do they?
Absolutely, because as you say uranium mining is a little bit different, and I know that there's a lot of understatement in that.
Yeah.
It's critically different.
Right.
You need two things at a senior level. You need that understanding of uranium, those people who've done it before, but you also need to know the country.
Okay.
So we've got Mike Leach, who, in terms of knowing the country, former president of the Chamber of Mines in Namibia, former chairman of the Namibian Uranium Association. The list goes on. He's, in my opinion, the most senior mining executive in the country.
Right.
He's our chairman.
You're in Namibia, so Namibia known for mining, but is it what is it, gold? And what was the kind of main mining output?
Uranium and diamonds.
Uranium and diamonds.
It does have gold, it does have copper, lead, etc., etc.
Okay.
But it's mining's extremely important to Namibia.
Right.
It's a big chunk of its GDP and the majority of its foreign earnings.
Right.
And uranium is half of that equation.
So it's important that you get into production, start generating cash, employing people, and all of that kind of good stuff.
Yeah.
Okay, I get that.
But it's not just Mike. Our managing director in country, Werner Ewald, he was mining manager at Rossing. He's born Namibian, very, very well known in country, great reputation. Dustin Garrow is our strategic marketing advisor.
We know Dustin. We know Dustin. Yeah, we interviewed a couple of times.
Dustin sold Namibian uranium for Paladin.
Right.
So obviously he knows uranium because he's been in the industry for more than 40 years. But he knows Namibian uranium. He knows exactly what needs to be done to get it out of the country. We're not going to have a mishap on our first shipment and all of that stuff.
Sorry, I've forgotten he was involved with you guys. We like him a lot. He just talks common sense. In fact, I encourage people to watch the interview with Dustin.
And as you know, I lived in Namibia for more than 5 years myself.
Yeah.
So I know the setup in Namibia,
but there's a lot of things going on in Namibia. Like, unemployment is quite high. I mean, you sort of look at what's happening in various other countries in Africa. I mean, is Namibia a really benign environment, or should people be worried about the jurisdiction?
From a living there point of view, it's entirely benign. I mean, I lived there with my family, with my small kids, for more than 5 years. Never even had my car broken into.
Right. Okay.
I'd liken it to living in large parts of Australia.
Right. Okay.
Good infrastructure, very strong development agenda, as you know.
Right.
Because of unemployment and fiscal reasons, etc., etc. But the other thing is, because the country was largely built off diamonds and then uranium.
Yeah.
There's a very strong not only acceptance of uranium, but respect for uranium. You go into Swakopmund, which is the coastal town near our project, half of the infrastructure has been built by Rossing.
Right.
People remember, appreciate and value that. And that is so different to so many different uranium mining jurisdictions.
Yeah.
Even the little NGOs that we've, the interest groups that we've got there that oppose nuclear power and oppose uranium mining, we let them have their voice. I've been in debates with the people there. It's all very respectful, but they don't get any traction amongst the local people because people value and are appreciative of what uranium mining's done for the whole country.
Right. I'm afraid that's all we have time for today. You're going to come back and tell us the Bannerman story properly.
Okay, love to do that.
In the next couple of weeks, probably online when you're back in Oz. It's good to see you over here. Really is always good to see you over here, and perhaps you can share some of your WNA conversations with us as well when we talk.
Great, yeah, always good to catch up. Okay. Thanks for making time.
Appreciate it. Good man. See you soon.